learning how to lose is the single most important thing in this game, you know? Because I was in this book, Market Wizards, right?
Yeah.
People call me a market wizard, okay? And what I can tell you is if you want to define me as a market wizard, I'm here to tell you it has nothing to do with my ability to predict markets. Zero, right? I can't predict the future any better than anybody else, right? And anyone who says they can, by the way, is lying, right? They're scamming you. But what I'm really trying to do with that is show them, here's my process, here's me following my process, here's me getting stopped out of trades in a disciplined way, here's me riding winners in a disciplined way. And these, I want you to see, if you think I'm a market wizard, I want you to see how a market wizard does those things so it can help you do those things over time. You can't be contrarian price, right? Contrarian is not, oh, the market's going up, so I'm going to get short. That's not contrarian. That's stupid. Okay? And I don't mean that personally because I've been there myself.
Right,
okay?
yeah.
You got to just get out and wait for another day. I know it hurts. I know it's painful, but you got to take your loss. If something happens and the government does come in and do the bailout again, and then the market does not rally on that,
I see.
I think that's going to be very bearish.
I see. Hold on. There's sirens outside.
They're coming for me.
They're coming for you. Yeah, they didn't like
They
what you
found
said.
me. Yeah, they
we're live
found me.
streaming right now to YouTube.
That's it. This guy's telling the truth about the government.
This is Jason Shapiro, a futures trader who has managed hundreds of millions of dollars over the last 30 years. From trading the crazy tech bubble rallies in the 1990s to thriving in today's bull market, he's developed his very own contrarian trading strategies to target the market with large trading volume. Jason's experience and performance in the market has gotten him the label Market Wizard in a famous trading book authored by Jack Schwager. Today, Jason is here to share his knowledge with you on how to trade with a contrarian process, a high risk to reward approach using the news failure confirmation, important entry execution techniques for retail traders, and the importance of trader psychology to achieve long-term success. This is a very exciting episode. It's the first time we have a futures trader on the podcast, and Jason Shapiro actually flew out of Rhode Island to join us today. So make sure you tap the like button and join us as we dive into Jason's journey and wisdom in the world of trading as an unknown market wizard. I believe a lot of our audience have seen your very unique futures trading approach. Before we get started with the details, can you just kind of tell our audience what kind of trader you are and what do you trade and your approach in general to the markets?
So I'm a futures trader. I own a CTA, Commodity Trading Advisor, and I manage money for a handful of institutional clients in the futures markets. A lot of CTAs are considered trend followers. I'm not a trend follower. I kind of counter trade the markets. So my return stream tends to be zero to negatively correlated to most of those type of strategies. So my clients allocate money to me so that they can have what is hopefully a positive return, but with negative correlation to the rest of their portfolio in there. And that gives them a much more efficient portfolio over time.
I see. And how long have you been trading now? What's your experience in the market been like?
I mean, I'm 56 now.
Okay. Very experienced.
I mean, I started trading at 21. So I've been trading the way that I trade now is about 23 or going on 24 years now of the process that I use now. The first 10 years of my trading, I was doing pretty much what everybody does when they get involved in trading, you know?
Okay.
It's going through different levels of understanding fundamentals, understanding technicals, understanding trading psychology, and, you know, going through the whole ups and downs of all that. And then after 10 years, I finally sort of settled on a process that I have now been using exclusively for the last 24 years.
And have you always traded futures? Did you ever get started with like stocks or Forex or any other asset classes?
Yeah, I mean, when I first started trading, I was trading futures too then, but I was very involved in equities as well. Forex, I mean, I never really traded Forex, but I trade futures on the currencies, so I guess that's Forex in a way.
Yeah.
But yeah, I did a lot of individual stocks in the early days and a lot of futures, and now I'm really primarily futures.
And what was it about your performance or your, I guess, approach to the market that kind of caught the eye of Jack? I forgot his last name.
Schwager.
Yeah. Where he obviously wrote about you in his newest Unknown Market Wizards book.
Yeah, I think just because the way that I approach the market is different than most people approach the market. And, he's always looking for that. I think one of the overall themes that you can find from Jack's books is that people have an unlimited way of approaching the market. Everybody's got a different way of doing it.
Yeah.
And yet you can be successful, doing any of them. And you can also be a failure doing any of them.
Yes.
I think that's really one of the overall themes in his book. It's more about things like discipline and risk management that's going to get you through the day over time than it is about the actual individual approach that you take. I actually did an interview with somebody a couple weeks ago, Peter Brandt.
Oh, yeah.
And, somebody wanted me to ask him the question where he mentioned, he has changed the way he trades, where before he was using sort of shorter term moving averages. He's a very technical trader. And now he's longer term moving averages. And why did he make that change? And is there anything else he's changed? And he was like, look, it doesn't matter. That was his answer, He goes, why did I make the change from shorter term to longer term? Because I'm old now and I can't have so many positions to monitor. So if I have longer term moving averages, I don't have as many positions. That was his answer. He's like, it doesn't matter what you do. It's all about your risk management.
Yeah.
And I think that's true.
That makes sense. Like as you get older, as we all get older, our approach could change slightly, but maybe the underlying like thesis or the way you look at markets is pretty much the same. In your last 30 years of trading, you obviously seen like the ups and downs of the market. What would you say would be the most memorable macro event, and how did you take advantage of it, whether it's one trade or a couple of different trades?
The most memorable macro event?
Yeah, macro events that cost you to take a trade that's memorable, whether it's a loss or like a win.
So there was a situation, and it's kind of two events in a way, but
okay.
I was trading during the Asian crisis in 97, I think it was. And at the time, we saw something brand new. The Asian markets were crashing. The Chinese government stepped in and started buying every single stock in the Hang Seng Index. Okay. The old machines used to show on the bid and the offer a broker number. And there was a broker, the same broker number was on the bid for every single stock on the Hang Seng Index, all of a sudden, for about 2 weeks. And it was this small brokerage house out of mainland China. So everybody kind of knew who it was. And this was never seen before, And so the consensus at the time was that it was terrible because it was the Chinese government taking over Hong Kong and turning it socialist, and Hong Kong was always so great because it was a free market, and this was so bad. And so everybody was selling because they were getting bearish because of that. And it just kind of struck me like, if everybody is selling this, then when they're done selling, who's going to be left to sell,
Right.
Forgetting about the macro picture of, socialism and all this. And truthfully, I think it took maybe a year and a half or 2 years. That was the bottom of the Hang Seng Index. And about 2 years later, it was up, 40, 50%. And the government sold all those stocks out and sent a check to every man, woman, and child in Hong Kong. Or maybe every taxpayer in Hong Kong got like a dividend check from that, which was interesting because then the same thing, or a similar thing, I would say, happened, in the U.S. In 08. Everything crashed. There was no bottom. The world was coming to an end. And the government stepped in and provided liquidity. They did it in a different way. They weren't necessarily buying every single stock on the board, but they provided liquidity. And now I was back in the U.S. at this time, and I was working for a big hedge fund. And the consensus there was this same thing. This was bad because the government was, printing money, and printing money was going to be bad, and it was going to cause all this inflation, and it was going to cause a whole horror show. And it was the same psychology that I heard in Hong Kong. And as it turned out, it was the same result, right? That ended up being the bottom of the market. Now, the U.S. government hasn't gone and sent every taxpayer a check with all the profits they made by buying all those things, unfortunately, because that's not how the U.S. works.
Right.
But it was the same thing. You know, it was the same type of psychology. And I'm a very psychology-driven trader, right? So it was interesting that I happened to be in Hong Kong when that first thing happened. And then I was able to witness the same exact psychology in the U.S. in '08. And the result ended up being the same. And I think that's interesting from that point of view. And I think it's also interesting for the future here. And I don't like to go and make the end of the world bearish case because it's just a horrible thing to trade off. But what I'm trying to say is because that worked in '08 and '09, you know, people forget and maybe weren't around, but at the time, people saw that as very bearish, right? And now we look at these things as bullish, right? Now everybody's like, oh, well, if the market goes down, then the government will come in and bail us out, and that will be bullish. And nobody ever really wants to get too bearish macro-wise. Well, sometimes they do, but in general, they think that bailouts are good now, right?
Yeah.
So I kind of feel like, and we're a ways away from this, but if we get to the point where we get there again, I think that's going to be very bearish. I think that's end of the world type of stuff. And we're not there.
Right.
And I don't know if we get there. I think we get there, but it could be a year, 10 years, or 40 years away, right? I don't know which one. I just wait for the market to show. But if something happens and the government does come in and do the bailout again, and then the market does not rally on that,
I see.
I think that's going to be very bearish.
I see. And both of those times in the past, did you pull the trigger and went long instead?
In the Hong Kong one, I did not.
Okay.
It was new to me. I was scared. But I learned, and in the '08, '09 one, I did.
Hold on, there's sirens outside.
They're coming for me.
They're coming for you. Yeah, they didn't like
They
what you
found
said.
me. Yeah, they
we're
found
live
me.
streaming right now to YouTube.
That's it. This guy's telling the truth about the government.
So would you call the most recent reversal in 2020 almost similar? When the Fed dropped the rates all the way down to zero, would that be a similar move? And did you take advantage of that?
I think it's a little bit different than that. You know, to me, the whole dropping rates to zero thing is and this is all stolen from Ray Dalio. You know, I just kind of finished his one big book a few weeks ago.
Okay.
But I think he makes a lot of good and quite scary points, right? Where you have a society that succeeds and then they get fat and lazy and then nobody wants to accept that. You're having a lower living standard, so you just keep lowering interest rates, right? And print money, and it makes people feel like they still have money and all that, but you're really losing on a net basis. And then once you get interest rates to zero, you can't go any lower. I mean, that's kind of what I think that we did here, you know?
Yeah.
And that's why I worry the next time this happens that it's going to be bad. And again, I don't want to get too into the big bearish argument because being bearish is horrible, okay?
I see.
But I do think it's something. I don't trade off of any of these macro ideas, but if that fits in with the way I do trade, like I would never trade anything unless the market is confirming what I'm thinking anyway. And I don't think anybody should trade off anything unless the market is confirming what you're thinking, right?
Okay.
You're not going to fight the market because you're not going to be smarter than the market over time. But if what you're thinking, put it on the shelf, let the market start to confirm it, and then go with it. That's really the way to do it, and that's how I do it. You know, whatever I'm doing, I'm not doing anything until the market confirms it.
Okay.
So in the light of this whole end of the world thing, you have to wait for these things to happen. You know,
see.
Let hit the fan, let the government come in and try and support it, and then see how the market reacts. That's what you have to do, and then you can try to make money off of it.
Yeah, I would love to hear more about your process. I understand you're mostly a contrarian trader, or I guess you are a contrarian trader. So we talked about, let's say you have a macro thesis, but you don't act on it until the market shows you. So what kind of things do you look for in the market, whether it's chart patterns, reports, data? What kind of things would you use to kind of confirm your thesis in order for you to actually take a trade?
So for me, when you talk about contrarian, I think that everyone says they're contrarian. Everyone wants to be contrarian, right?
It's cool nowadays to be contrarian.
It's always cool to be contrarian. it also will get you completely run over, right? And that's sort of what happened to me in my early days, right? So to me, what contrarian means is the big difference is you can't be contrarian price, right? Contrarian is not, oh, the market's going up, so I'm going to get short. That's not contrarian. That's stupid. Okay? And I don't mean that personally because I've been there myself.
Right,
okay?
yeah.
And same thing, just because the market's going down, contrarian does not mean getting long, right? You're just fighting the tape.
Yeah.
So people are being contrarian price. And I think that's where they make a mistake being contrarian. I try to be contrarian positioning, right?
Okay.
So in other words, to me, it's not, hey, the market's gone up a lot, so I'm going to get short. It's, from what I can see, everybody's long this thing, so I'm going to look to get short. Or everybody is short this thing, so I'm going to look to get long. So look to, okay? If I see from the data that I look at that everybody is short this thing, okay, now I'm looking to get long. But I'm not going to get long until the market confirms it. So how do I define what the market confirming it is? Well, if I find a market where everybody's short, I'm now paying a lot of attention to it. What is it that's getting everyone short? What is it that's getting everyone bearish, right? And let's say it's the stock market. Let's say we're in 2022 and it's October.
October 22, okay.
And the market's been going down all year. And it's been going down because the CPI keeps going up. And so the Fed has to keep raising rates. That was the theme. Yeah. So the October CPI number, this is just one example, but the October CPI number came out in October 22, and it was the highest it had ever been for that entire run. Yeah. And it was higher than even expected, right? So clearly that was a bearish thing. And the market dropped pretty big that morning and closed up on the day. So that, to me, is the market confirming. The data just gave the bears everything they wanted, yet the market can't go down.
I see. It actually bounced.
Yes, yeah. and closed up on the day.
Okay.
Now, why is that? Did everybody not see the CPI number? I mean, clearly they did. It was the most watched data coming out, right?
Yeah.
To me, the reason why is because everybody was short. So there's no one left to short, So you got the bad number reversed, and if you look, that was actually the exact low of the entire move down. We haven't been anywhere close to that low since, right? So I call it a news failure, right? So the market did not react the way the news would expect it to.
I see.
So that's what I wait for to put these trades on. So everyone's short. I'm looking to get long. I'm looking to be contrarian.
I see.
But I'm waiting for the market to tell me, hey, now's the time. And the way it tells me is like that. The news comes, and the market does the opposite of what the news would have expected to be. And that doesn't necessarily always work, okay? Just like nothing always works.
Yeah.
But what it gives me is great risk reward, which is really what this game is about, right? If it had gone through the low of that day, then I would have gotten stopped out. Because if I'm picking turns, well, if we close on a new low, well, then I didn't pick the turn by definition, right? So my risk is basically that 1 day worth of volatility. Where my reward is, I can ride that thing for whatever. As it turned out, I rode that for about 8 months.
Oh, wow.
So that's what it's really all about, is trying to find good risk reward more than any. Well, that's really what this is all about at the end of the day. Trying to determine how to find good risk reward. And the way I do that is via positioning.
And you mentioned a lot that you look at certain data to look at everyone's positioning. What is this data that you look at?
So the main data I look at is the Commitment of Traders report, which comes out every week. It's based on futures positioning, which the CFTC, who is the regulator for the futures in the U.S., releases every week.
I see.
So I take that data and we index it and chart it and look for when it's at extremes. And when is it at extremes? That is when I sort of have a window open for when I can start to look for one of these news failure events.
So you could be following that report and look at how it changes over a couple of weeks before you even actually place a trade. Like you can kind of like follow the report and read it and analyze it.
I only, because I am picking turns,
I
only am looking to do a trade where that stuff is at massive extremes. So when it's not at massive extremes, to me, we're just in random mode. Market can go up or down or whatever. But when it's at massive extremes, that's when I'm looking to go the other way.
I think I've seen a couple of those example of those COT data on your videos or like
Sure.
your website.
Yeah.
So you get the data and you kind of compile them into different asset classes and different like levels of buying activity. Is that what it kind of looks like? How do you read it?
Yeah, so
We can
just
put it on screen too.
market by market, you know.
Okay.
Here's the thing, and I index it.
Okay.
And, you know, if the index gets to 100, that indicates people are way too long.
I see.
And when the index gets to 0, that indicates that people are way too short.
I see.
And it starts from there. And then I can, thanks to my partner, took this data. Before we started like Crowded Market Report, I used to, there's free charts for the COT on the internet everywhere, right?
Yeah.
But I didn't like any of it, so I used to purchase the charts from someplace that were better than the ones I found on the internet.
Okay.
But my partner has put together much better charts for everything. So like we can take on our charts, I can say, okay, forget about just the S&P. Let's say I want to do all the stock indices. So here, NASDAQ, S&P, Dow, Russell, and I can put those into one big chart and say, okay, here's the positioning for all of equity indices. Or I can do that for all fixed income or all current or whatever I want to do, right?
I see.
I can also do one relative to the other. Here's British pound versus Swiss franc or something like that. So I look at all that stuff out of curiosity more than anything else.
Okay.
But for what I actually do, I'm just looking at the individual markets, indexing the data, looking for it to be at extremes, and then waiting for the market to confirm to go the other way.
And do you also use a COT report for exit? Let's say you were
Yes.
long when the market became more balanced, and that's when you exit out your position.
Exactly right.
Oh, I
Which
see.
again gets into, that's what I do, how
Yeah.
I do it, but that's what everybody has to do to me when you're
Okay.
developing a process, right? So my process is everybody's super short. Market stopped going down on bad news. I get long. I think it stopped. Okay, that's fine. Which is a definition of my process. If my process is I'm picking a turn. If it closes at a new low, I didn't get the turn, so I'm out. So it's a stop that makes sense based on my process. So how do I get out? Well, it's the same thing. If I'm getting in because everybody's short,
Yeah.
then if the trade actually goes my way and goes up and all these shorts get squeezed out, well, now I don't have my edge anymore. My edge was everyone was short.
Yeah.
So if they're no longer short like that, then I get out. So I don't have to worry about like, oh, should I get out here? Should I get out of half of my position? Like it's all like this guess that goes on in our mind and screws us up. We get out of
Right.
some and then it goes up more and you're like, oh, I shouldn't have gotten out. So you get back in and then it goes down again and then, oh, I shouldn't have gotten chased. You get out and
Okay.
it goes up. You know what I mean? We all get caught in that.
Yeah.
And that's what process is all about. So with my process, I'm just capturing what it is my edge is. So I get out. They got out of their shorts. I'm out. Doesn't mean the market can't go up. The market can still go up.
Yeah.
But that's not part of my process. So I
see,
really
I
don't care. You know what I mean? I mean, the market, I trade 37 markets. They're going up or down every single day. So theoretically, I'm missing trades every single day, right?
I guess so, yeah.
But if it doesn't fit in my process, then it doesn't mean anything to
Right.
me, you know?
At any given point, do you have multiple positions open at the same time? Just because from what you see from the COT report?
Yeah, I mean, I usually have between like 3 and 7 trades on at a time.
Okay.
The last 6 months, I've had the least amount of trades I've ever had in my 24 years of doing this.
Oh, why is that?
It's just there hasn't been super crowded markets.
Really?
Right?
Okay.
Which, you know, I look back over 23 years, I was out of the market completely a total of 2 months. I'm not talking about 2 months straight. I'm talking about a total in 23
okay.
years, 2 months. This year, I was out of the market completely for 3 months straight,
Oh.
which is hard, you know,
Yeah.
because first of all, I've never done that, right? And the discipline, you know, you're sitting
Yeah,
watching the
yeah.
market every day and you want to be involved and blah, 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 you know. The discipline is very hard. So this has actually been a great lesson for me in my discipline. How disciplined can I be to my process? But when I look back at it, it was phenomenal, truthfully, because you look at what, again, going back to what I do, I'm creating a negative return stream to trend followers, right? Well, trend followers have crushed it the last 3-4 months, right? I mean, I see some of these big trend followers are up 30, 40% this year. I'm flat because I had no trades. So if I can be, from a what I provide my client point of view, if I can be flat while trend followers are up 30%, and I'm supposed to be negatively correlated to them, that's a home run.
That's true, yeah.
And so the data has helped me to do that. It's hard to do in the midst of it, but the truth is, as I look back now, that data saved me. And I say a lot about the Commitments to Traders report, a lot about that too. It's not necessarily a better predictor of markets than anything else, but it's a great risk manager because it kept me out of trying to be contrarian, I could have been contrarian on cocoa, at 4,000 and it's now trading at like 9,000 or something, right? If I was just looking at price and if it was overbought and all that, I could have been contrarian, right? Which is what I would have done in my old days, okay, before I started using this data. But this data said to me, it's not crowded, so don't try to fade it. Don't be contrarian, right? Don't be contrarian price, be contrarian participation. So because the participation wasn't there, I didn't short it, and that has been great because it allows me a few things. When I do start getting trades, when markets hopefully do start getting crowded and do start turning, and I make some money, I will be making money from no drawdown. So it'll all be new profits, right?
Yeah.
Instead of, hey, okay, I draw down 5%, and now I make 5%. Well, now I'm net nowhere, right? I hate that.
That's true.
Right?
Yeah.
So it's hard, but it's been great. As I look at it, my client, I don't get paid. You know what I mean? March, the quarter's going to be up in 2 weeks. I haven't made any money this year. I'm flat. I'm not going to get paid this quarter. But it doesn't matter because when I do get paid, I'll be making new profits. So I will get paid. So people forget that. This game is about overtime. Everybody wants to make money today. Everybody wants to make money this month. You know what I mean? We all need money. We all want money, right? But this game is about overtime, and that's something that is very difficult to know and understand until time passes. I didn't know or understand that until 10 years passed. And I looked back and I was like, okay, I started doing this at 21. Now I'm 31. I'm no better off than I was at 21. In the meantime, hey, I bought a Porsche and then I had to sell the Porsche, and I bought a condo and I had to sell the condo. And, during it seems like you're doing great. But you pass 10 years and I'm like, I didn't waste, but financially I just wasted 10 years of my life,
Yeah.
But, I took the lessons and, I was dedicated to doing this. So I took the lessons and I moved on. It's hard for people, obviously, to accept these lessons, You have to go through them yourself, I feel like. I did. Not everybody has to. The smart people will listen.
Hopefully, yeah.
But most of us aren't smart enough to do that. Nobody. I always go back. I go, if I had listened to my dad, all the things my dad told me to do, I'd be much better off. You know what I mean? But I didn't. You know what I mean? None of us do, right? Some do maybe, but most of us don't, right? We want to break off and be our own person and not listen to our parents and learn our own lessons, right? And then you get older, you become a parent, and you learn that actually, I'm just trying to help you, I'm not trying to give you bad advice. I'm trying to have you learn the lessons that I have learned and try to stop you from having the pain that I had to go through. But my kids don't listen to me. I mean, they go through, you know what I mean? No one, it's just the cycle of life, right? And trading's no different. It's all psychology. So it's just the psychology of it all. But point being, it's an overtime game.
Yeah.
So you really have to decipher over time what's working for you trading and what's not. And there's a difference between what happened to work for you this time and what actually works for you over time. And only time can tell that. So it's a great idea to keep logs and keep diaries of your trades. I used to do it by type of trade. So I could then go back and say, okay, is this type of trade working for me? And if not, throw it away, right? Is this type of trade, almost like eliminating the things that aren't working, get you closer to the things that do work, right? That was a big thing for me. And again, if you don't write them down and keep a diary, you have a tendency to just remember. One book I read a long time ago, a guy used to call it faulty learning. You have a tendency to remember the one that worked. Hey, I did this breakout trade and it was a home run. Great. But what about all the breakout trades you've tried?
That's true, yeah.
Has that worked over time or has it not worked over time? And don't just remember that one that did work and keep chasing that dream, right? If you've made 100 breakout trades, now you can go back and look at them. Hey, this one worked great, but truthfully over time that has not worked for me. So I have to eliminate that from my trading. I think that's a really important thing And again, no one's going to listen, but I think it's an important thing if you really want to trade over a long period of time. It's an important thing to go through. And you will, whether you believe me or not, you will have this record. And the sooner you start a record, the better.
Yeah.
Because then you will have it. You can't go back and create the record, right? So if you have a record, then you'll have the data that you can go back and look at and really make an unbiased decision on whether what you're doing is working or not.
I think one thing you did mention that what you did in the earlier years is you were fighting the price. So that's what a lot of, I think when people first hear contrarian trading, they think about counter trend trading. So you kind of talked about the key difference there, right? So what would you suggest for traders who are kind of doing that same thing you mentioned earlier where, oh, NVIDIA is going up from like 500 to 800, so it must be a short.
500.
What would you
200
tell them?
to 900.
Yeah, 200 to 900, yes.
Yeah. I get it. I get the psychology behind it. I have been there and I have lived it, okay? I get it. You got to stop. And there's a few videos where I did that. I did some videos that were called like Stop Shorting NVIDIA, okay? And it wasn't about that I was bullish NVIDIA, and it wasn't about that I knew something about AI, because God knows I don't, okay? But my point is, if something is closing on an all-time high, stop being short, okay? You can't be short something that's at an all-time high. You just can't. And almost, I'm not going to say never, almost never, and I have traded a lot of different assets in my life, okay? Almost never have I seen something close at an all-time high, and the next day it was down 40%. You didn't get a chance to short it, right? It doesn't happen. You know, if you're going to be right, that's fine. But again, let the market confirm it first. It's not going to gap away from you. It's just from an all-time high. It's very rare that something's just going to gap down and run away, and you're going to miss it, right? So miss the, if you think NVIDIA is a bubble and it's going from 900 back to 100, well, then missing the first 30 points ain't going to kill you, right?
Right.
But keep shorting it and losing 50 points 10 different times is going to kill you, right? And NVIDIA is just such an interesting one this year because in the last year and a half or whatever, it's been very interesting to me to watch it from a psychology point of view because everybody talks about NVIDIA. Everybody I know has been shorting NVIDIA.
Oh, really?
I mean, not that I know, but everybody I hear talk, and everybody, that's been like the big trade. They want to catch the NVIDIA top, right? Because that's the bubble, right? And I believe that the reason for that is, I personally believe, you had 2021, COVID to sort of mid-21, which was a no-lose bull market, right?
Okay.
All you had to do was buy something. It didn't even matter what. And not sell it because eventually it was going up, right? Then you had late 21 and 22, where if you did that, you had learned that habit in 2021, you got crushed. And look, I went through the same exact thing when I started trading, okay? So now you got crushed. So now you want to play the bear side, which is what everybody did, in 23. They wanted to play the bear side. Oh, I'm not going to get stuck with this again. I learned my lesson. I was one of the suckers back then that got caught in these stocks, and this time I'm going to short into them. So now they shorted NVIDIA because they didn't want to be caught in all those stocks again, and it went up in their face, right? It's all positioning to me, right? That's what I'm saying, And if you can look at almost anything, you remember the big squeeze in GameStop, right?
Oh, yeah.
GameStop didn't go from being a crap company to being a great company, right? It went up simply because people were way, way too short, and they got squeezed. That was it. It had nothing to do with the change in fundamentals in any way, shape, or form, right? It was all positioning, right? And I can go through a million trades through my history where I can prove that, and I can show that. So you got to remember that, And if you're on a chat site and everybody's talking about shorting NVIDIA, you got to run away, man. You know what I mean? Because I know there's comfort in numbers, but do you want to be comfortable or do you want to make money, right? And that's a choice you have to make, and a lot of people, if they're truly honest, a big part of what we want to be is part of a group and all that, right?
Yeah.
So if you want to be part of a group, that's fine. Short NVIDIA with all your friends, right? But if you want to make money, you have to be disciplined, and you can't do that, right? Because you're going to get run over, right? And this is not a commentary on NVIDIA, right? This is just a commentary on trading.
Yeah.
Don't keep shorting something that keeps closing at a new high. You know, you feel like you're going to miss it. I've lost so much money doing that over my lifetime. You're not going to miss it if it's closing at a new high. You're not going to miss the short. If it's at a new high, you got to just get out and wait for another day. I know it hurts. I know it's painful, but you got to take your loss.
Yeah.
You know, learning how to lose is the single most important thing in this game, you know? Because I was in this book, Market Wizards, right?
Yeah.
People call me a market wizard, okay? And what I can tell you is if you want to define me as a market wizard, I'm here to tell you it has nothing to do with my ability to predict markets. Zero, right? I can't predict the future any better than anybody else, right? And anyone who says they can, by the way, is lying, right? They're scamming you. And we can have that whole conversation. But if I'm better than people at something, it's taking losses. If I'm a market wizard, it's because I know how to take losses better than most people. Nothing to do with my ability to predict the future of the market, where the S&P is going. I don't have any better ability than nobody does. And everybody will tell you this. Every good trader will tell you this, okay? Every successful, I'm talking about the real, I'm not talking about the guy who just made $50 million in Bitcoin in the last 4 months, right?
Right.
I'm talking about every long-term successful trader that you can read about in books and all that stuff. Tudor Jones and, you know, all these guys, they will all tell you the same thing. It's risk management. It's taking losses. That is what's going to make you a successful trader.
So yeah, I also understand for you when you take trades, like you said earlier, you'll use defined risk. So let's say like a lower day of that candle where it doesn't make new lows. So when you write out your profit, let's say it's over the course of a couple of weeks or months. I don't know what your average holding time is, but the idea is that you're risking one and making potentially what kind of risk reward?
On average, it's about 4.
Okay.
So like my winning trade percentage over these 24 years is just under 40%.
Okay.
So I make money on less than 50% of my trades.
Yeah.
But let's say it's a third. If I can make one, lose one, make 4. Lose one, make 4. Lose one, make 4. And do that over time. That's how you get a winning track record over time.
Yeah, I see.
You know?
Okay. And do you also use besides the COT data, do you also use the actual candles on the chart as part of that confirmation? Or you don't really need charts at all?
You know, the typical news failure confirmation for me will look like a reversal candle.
Okay. So you do look at the candlesticks.
Because you'll get a piece of bad news, the thing will go down, and then I know where it will rebound and close up. Well, that's the reversal candle, right? So not always, but a large percentage of the time, it looks like that reversal candle.
I see.
But only once the positioning is showing that people are way overdone on one side.
Okay. And your current strategy works really well, I guess, as a swing trade. Do you have a different approach when it comes to day trading?
So I don't day trade. I used to.
Okay.
When I was trading my own account a lot. I used to do a lot of stock index day trading. I can't do that now for a number of reasons. One being that is not what I tell my clients I do. That is not what I'm hired to do.
I see.
I'm hired to do what I do, so that's what I do. 2, you know, my size at this point is a little bit too big to go ahead and, you know, day trade, you know, 1,500 S&Ps or something. You know what I mean? The slippage and all that would just be ridiculous. So, but I do have a day trading process that I used to do in my own account that I think works very, very well. And I've taken the people like on our Discord and all that through that. And a lot of them are using that, I think, pretty successfully for their trading. And I will occasionally use it if I'm looking to enter something.
Okay.
Let's say I'm looking to enter either a stock index position, or even a position that I think is very correlated to stock positions, right? If I'm looking to enter it today and this day trading thing starts telling me, hey, the market's going to go that way, then I might start to enter my position over the course of the day because it's sort of confirming that in the intraday thing.
Oh, so you're talking about you use like day trading method to analyze the patterns to find entry points for your
like
swing trades.
if I'm looking, like let's take that
Okay.
S&P low from
Okay.
whatever that was, October 20, I forget the years at this point, 22, I guess.
2022,
Right. So the October low in 22.
Yeah.
So I know everybody's short.
Yeah.
I know I'm looking to get long. I know
Okay.
we had this super bearish CPI number. I don't know if it's going to close up on the day, okay?
Mm-hmm.
And when it does, that's when I'll get long. But maybe during the day, my intraday thing is starting to say, hey, this market's going to turn around and go up. My day trading system, so to speak, is saying that.
Okay.
And I might start putting that on earlier than the close because it's sort of telling me in that day trading thing that the market's probably going up today.
Oh, I see. And then you'll just end up keeping that position for the next couple of weeks or months.
As long as it takes for them to get out of the shorts, yeah.
Oh, okay. And then when you exit your position, you look at the COT data, but not so much. Do you still look at candlesticks?
No, at that point, if the COT data goes neutral, no,
You just get out.
I'm out.
Oh, I see. And what is this day trading system? Like, is it mostly based on indicators or any contrarian strategy or fundamentals
It's
at
based
all?
on the fact that, there are three major indices, right? The NASDAQ, the Dow, the S&P, okay?
Yeah.
And clearly, the NASDAQ's going to be the most volatile. The S&P will be the second most volatile, and the Dow will be the third most volatile.
Okay.
Highest beta, if you want to call it that, or volatile. So if the market's going up, in my view, then the most volatile assets should be going up the most. So if you're having an up day, the NASDAQ should be up the most. The S&P should be up the second most, and the Dow should be up the third most. NASDAQ up 1%, S&P up 0.75%, Dow up 0.5%. That's an up day. That's what an up day should look like. And a down day, the opposite. If you're having a down day, you can look at today, right? The NASDAQ should be down the most, S&P should be down the second most, and Dow should be down the least, right? That's the most volatile stuff. I mean, it's just simple math, right? That's a down day. So you can trade that as a trend. Okay, this is a trend up day. NASDAQ's up the most. Blah, blah, blah. So I want to be long today because that's what
Okay.
the trend day is telling me. Or if you want to be short, okay, there's a trend down day. So I want to trade it from the short side. And you have to figure out where you're going to enter it and all that, right?
Yeah.
Which is a time thing, which I can get into. But that's the general idea. Where it gets really interesting is on reversal days, right? Where you'll have probably a piece of bad news or something like that. Hey, NVIDIA earnings come out bad or something like that. Not that that's ever happened, but it could one
Right,
day.
yeah.
Something happens bad. And then NASDAQ is leading the market down, as it should. And then maybe halfway through the day, suddenly the Dow makes a new low. And the
Okay.
S&P doesn't really make a new low. And the NASDAQ doesn't even come close to making a new low. So it's switching, right? Suddenly the stuff that's supposed to be more volatile is down less than the stuff that's supposed to be less. That's when you see the market reverse. And that becomes very interesting because you can start buying that weakness in the market,
okay.
and you can catch the turn the other way. Those are my favorite trades, but you can do it as a trend thing too,
Yeah.
And this works, I can tell you, a lot. Like everything else, not every day. So therefore you have to define your risk because there will
Yeah.
be days where it doesn't work. And it's going to take discipline because you're going to really want to read this with an unbiased mind, not be like, well, it's kind of leading and it's kind of lagging. You know what I mean? Those days are like, if you have to say kind of, don't trade it because it's not there, right?
Yeah.
But when it is there, it has a very high success rate.
Interesting. The first method you mentioned for day trading is more trend following. So you used
Well,
to
it
do
can
that
be
for
trend
day
following.
trading. Not for
And
much for
it's
swing.
it's a definite what is trend though. You know what I mean? To me, the trend day is that
Yeah.
these things are working the way they should, right? The high, more
Oh,
volatile
not
stuff
like it's
are leading the
uptrending.
trend. As long as it's like a confirmation of the trend.
I see.
If it's trending, then the most volatile stuff should be leading, whether that be up or down, right? That to me is a trend day. But
Okay. Do you think you manage your risk differently when day trading versus your bigger, longer term swing trades?
I don't day trade, but if I were
Right,
day
yeah.
trading, again, I would manage my risk based on what the process was I was using. So if I was using this day trading process that I'm talking about, I would manage it based on that, right?
Okay.
So it's all about that. You got to start with what is your process and what is it you're trying to do, and therefore, where can it go wrong? How badly can it go wrong? And how can I manage my risk in case that happens?
I have to say, before preparing for this conversation, I was a little nervous because I don't actually trade futures. Like, I have very little knowledge. Like, I trade stocks, so I wasn't quite sure if I will understand what you say. But like so far, like I understood everything. You explain things really well. Yeah.
I've been doing this for a very long time.
Yeah.
And the truth is, like, there are people that are on our Discord and all that stuff. They only trade stocks.
Oh, okay.
But this can help. The futures can help you, right?
Yeah.
If we're getting a huge buy in Nasdaq futures,
Right. Of course, the
then
stocks
you
in
can-
Nasdaq.
First of all, you can buy the
Yeah.
Qs. You
Yeah.
don't have to buy futures. You can buy the Qs.
Yeah.
Or you can buy, your favorite NASDAQ stock. It will just help increase the odds of that, right?
Yeah.
And same thing on the short side, right? If we're getting a short, then maybe you're going to short the Qs. Or what if we're getting a huge buy in stocks and we're getting a huge buy in copper? Well, then, maybe you can start looking at the mining stocks.
I see. Yeah.
Because you have the market, first of all, can give you the wind behind your back. And then the metals can give you the wind behind your back. So maybe look at that. Or oil stocks. Maybe we're getting a huge buy in oil on the positioning and a huge buy in stocks. Well, then you can start looking at oil stocks, right? So there's a multitude of ways to use the commitment to traders data.
Yeah.
Some probably better than the way I do it. Truthfully, I think there are guys on our thing that have found better ways to do it than I do it.
Really?
Which is really my goal. I say to these
Okay.
people all the time, they want to copy trade me, which I beg them not to do
Yeah.
for so many reasons that we know are bad.
Yeah.
One being your goals are not necessarily the same as my goals. My goals are to give my clients a negative correlated return stream. You don't care less about a negatively correlated return stream. You care about maximizing your profits, okay?
Yeah.
I want to maximize my profit within the constraint of being negatively correlated. You don't need that. So first of all, that's silly. Second of all, we all know copy trading is horrible anyway, because
Yeah.
you're not going to have the discipline that I have to do this, because as soon as I lose 3 trades in a row, you're going to quit. You're going to say this guy sucks, his process sucks, whereas I have 24 years. I'm
Right.
going to believe it. I'm going to stick to it and all that. So there's a lot of reasons why copy trading me is not a great idea. But so I say to these guys all the time, I'm like, be better than me, man. You know what I mean? Don't limit yourself to what I do.
Yeah.
You have the advantage of you can take the things that you can learn here and you can apply them with things that you learn other places and things that you've learned for yourself and put them all together and be better than me. There's no reason not to do that. So people have views, and I watch them, the COT, for other things like that. And I watch them on our Discord because we have all kinds of different channels. Like, I don't trade options, but there's guys on there talking options and talking COT, and there's guys that day trade and that I don't do, and they're talking, and that's, they're using this data in other ways, which I think is awesome.
There's also a lot of futures traders who trade based on just purely technicals. Do you think it's possible to just trade based on candlestick patterns and, completely not having to look at economics or any of the macros? Do you think that's a good approach? Because I think that's what a lot of retail traders start out with, trading just patterns.
Do I think it's possible? First part of the question.
Yeah.
I think anything's possible.
Okay.
With good risk management and good discipline,
Okay.
I think anything's possible. The second part of the question, do I think that's a good idea? Me personally, from what I have learned, which clearly has some bias in it as well, no, I don't think that's a good idea. I don't think that that's a great strategy. I can be proven wrong. I've had people argue with me and tell me they could prove me wrong. And, I always say, like, I take guitar lessons, okay? I'm a new guitar player. And my guitar teacher always says, I took a bunch of time to learn music theory. And then we'll be playing something and it will sound great. And I'll be like, that doesn't fit into music theory. And he'll be like, listen, if it sounds good, it is good. That's the only rule that really matters, right? It doesn't matter if it fits in the music theory. If it sounds good, it is good. And I feel like it's the same thing with trading. If you're making money doing it, then it's good. Who cares what I say? Who cares what I think about technical analysis? Do I think that's all good? No. You ask me, I think it's garbage. And I think it's going to kill you over time. I'm sorry, I do. Right?
Yeah.
Now, maybe that's because it killed me over time. Maybe you're better at it than I am.
I see.
And if you are, great.
Yeah.
You know what I mean? If you're making money doing it, then do it, right? But if you're not making money doing it, then maybe start to think, and that's the thing about technical analysis and people who sell technical analysis, they'll tell you, oh, well, you're just reading the technicals wrong. That's why you're not making money doing it. My theory is you're not reading the technicals wrong. It's because it's all bullshit to begin with, okay? And that's why it's not working.
Right.
That's my theory. Is my theory right? I don't know. But that's my theory. And I have to say I've been trading a long time. I have to say I've worked with a lot of people in the trading business that have traded. And I feel like over time that is not going to do it for you.
I see.
You know, it's not, you know, not paying attention to macro, that's fine.
Yeah.
But it's about tape reading, which you could argue is technical analysis, right? But the market is going to send you the message, right?
Yeah.
A reversal day on bad news is different than a reversal day not on bad news to me.
Okay.
A trend that's going up that everybody is involved in, to me, is a different risk reward than a trend that's going up that nobody's involved in. I'd much rather be involved in a trend that nobody's involved in than a trend that everybody's involved in. Because if everybody's involved in it and some bad piece of news comes out and, you know, it starts breaking down and they all got their trailing stops, there could be a long way down, right? Whereas if nobody's involved in it, then a piece of bad news comes out and it's probably not going to go down that much because there's no one there to sell it because they're not involved, right?
Yeah.
I think these are the more important, for me, these are the more important things than just random technical crap and trend lines, and you drive yourself crazy because it's all, I haven't done a video on it yet. I've held back, but I could clearly, easily take just about anybody's technical analysis, trend line analysis, and rip a hole in it very, very easily because they show these trend lines and they draw to today. Here, there's 3 points on the trend line, and there it is. Today's move went right to it, to the penny. Okay, but if you take away today and you drew this thing 2 weeks ago, the line would have been totally different.
Yeah, the line's a different angle.
Right, you know what I mean? So that to me just proves what a load of crap it is, truthfully.
Yeah.
It's a lot of it is, it's just randomness, and you can get fooled. There's a book, Fooled by Randomness, right? But you can get fooled by the randomness if that's what you want to do. Now, even within my opinion of that, I do think technical analysis can help with risk management. If you believe, okay, there's a trend line here, whether I believe it or not, who cares? If there's your trend line and you think it's breaking above it, so you want to get long, great. But if it breaks back below it, then that means that's not a breakout and you got to get out.
Yeah.
So if that helps you with your risk management, then I think it's terrific.
Yeah.
It's like I say, if it works, it works. But that's how I think it can work. That's how just about anything can work, right? Is have a way to measure your risk management.
Earlier you mentioned that nowadays you are a CTA, so commodities trading advisor, so you manage clients' money. What's the most that you have as assets under management that you've done, like, I guess,
in my life?
Yeah. I guess you've done many different firms,
I mean, I
right?
worked at a pretty large hedge fund at one point. I was managing like $600 million or something. So I manage a little less than that now, but you know, a couple $100 million.
Do you think it's more stressful managing other people's money?
It goes both ways. You know, it depends, again, the situation you get yourself into. I left a hedge fund and I started a CTA.
Yeah.
And hired a bunch of people, and I was going to be the next, you know, Wall Street hero billionaire.
Oh, okay.
And that was very stressful because I had a huge cost base and I had to raise assets. And I had to raise assets from anybody that would be willing to give me assets because I had to get fees in so I could pay this huge nut that I had. That was very stressful because I had not a very bad client base, but some of my clients were not really the right clients for me.
Okay.
And so I shut that down after about 3.5 years, something like that. When I restarted up about 5 or 6 years ago, I became a one-man operation. I work out of my house, so I have no costs. So I don't have to charge any management fee. It's less stressful now because I didn't need to raise money. I didn't need to raise a lot of money.
Okay.
Because I don't really have any costs. So I was able to sort of, in a way, pick and choose my clients that were investing with me for what I considered to be the right reason, right?
Okay.
And for me, everybody wants to chase returns, right? But I don't want them to chase my returns. I want them to understand that I offer a negatively correlated return stream, which over time is going to expand their risk-adjusted returns of their portfolio. And that's what my job is. So it becomes a lot less stressful because then they're judging me on, am I doing that job? And I know I'm always doing that job, right?
Okay.
It becomes less stressful because if I go through a period where I'm not making money, like now, this year, okay, I'm flat, okay? But the rest of their portfolio is killing it if they have trend followers in there, which is what most of my guys are going to have.
Okay.
So they understand that I'm not supposed to be making money here. They're not saying,
see.
hey, you suck, Shapiro, you're flat on the year and everybody's making money.
Right.
It's actually, you're great, Shapiro, because you're flat on the year and everybody else is making money. You know, when I used to raise money from people, I used to tell them, what you want to do is give me money and then hope I lose money every single month. Because if I lose money every single month, it means the rest of your portfolio is killing it.
I see.
And people would be like, how can you say that the clients give me money and hope I lose money every single month? But the clients that understood what I was saying are the perfect clients for me. Because obviously the rest of their portfolio is not going to make money every month, right? And therefore I'm not going to lose money every month, right? But when you put it together and it's negatively correlated and they both have positive return expectations, your portfolio is going to do much better over time. So therefore it becomes a lot less stressful because I have clients that understand what it is, why they're giving me money, right? And it's not just chasing returns, right? So that's become, is it stressful? It's still stressful, but that's the game we play. I mean, trading, gambling, in markets it's a stressful thing. What are you going to do? I've learned to accept it and live off of it, but some days better than others. But
And where do you go about to raise money from your clients?
So, I've just developed relationships over 25 years,
Okay. Do you pitch them your idea when you are starting on
Originally
your
I
CTA?
did, clearly. This last iteration of my CTA, last 5 or 6 years, these are mostly people that knew me anyway.
I see.
So I pitched them on the idea of, hey, I'm starting this thing and I'd love to have you in. You already know what I do. You know what I mean? As long as you're okay with the fact that I'm a one-man operation. Some people aren't okay with that from an institutional point of view. They can't get it past their checklist or whatever,
Okay.
But as long as you're okay with that, I'm here for you. That was my pitch, basically.
Okay. And you also mentioned that because you are a one-man show, so you don't charge management fees. So then how do you make money from that?
So I get incentive fees, Most typical hedge fund used to be 2 and 20. They'd get 2% management fee a year and 20% of incentive fee or whatever. And I think that's probably gone down a lot to more like 1 and 20 or something like that.
Okay.
I do 0 and 30. So I get 0 management fee and I get a higher back end if I make money.
I see.
Which aligns me a lot more with the client too. I don't make any money if they don't make any money, A. And B, in times like now, when I have no trades, they're not going to be mad at me because they're not paying me management fee anyway.
Oh, yeah.
You know what I mean? So that also de-stresses it a lot. I don't feel like I have to be making trades because these guys are paying me a management fee. They're not going to call me up and be like, dude, you haven't made a trade in 3 months. What am I paying you for? Because they're not paying me.
I see. Okay. So that means when the market's down, like it was in 2022, you probably did really well for your clients. If you think about like the way you trade is like.
I had a good 22. I had a better 23.
Oh, okay.
If you think about it, because I was riding stocks long for the first half of 23, whereas most people were shorting it. And it's always going to be that. The only reason that I'm riding long is because I'm reading that most people are shorting it. So it's always going to be like that,
Psychologically, do you think you would trade differently if it was just your personal money versus trading investors' money?
So, this is a product in my business that offers this non-correlation or negative correlation. It's a piece of a puzzle.
Okay.
So would I trade exclusively the way that I trade now with all of my personal money? No, because I would never ask anybody to do that. I don't ask my clients, give me all your money, I'm a piece of a puzzle. So if I were to turn my stuff into a family office, I would probably outsource things for different return streams. And I would guess 25 to 30% of my assets and trade what I do now as part of my overall return stream. But that's really what I do with my personal money anyway. Most of it's outsourced. Here you go to some whatever wealth manager, you know what I mean, at Morgan Stanley. Put me in the 60-40 portfolio or whatever. Here's some real estate that I own. Here's some whatever. And then the trading that I do is actually a much bigger portion of my net worth because if you figure I'm managing X number of millions of dollars and I'm getting paid 30% of that, then 30% of that is essentially what I've allocated to that, right?
Yeah.
And that 30% of what I'm managing is a lot more than 30% of my net worth, I can tell you. So I'm exposed to my strategy from a personal point of view, but that's okay because it's my business. So, I should be overexposed to it in a way. So.
And for your business, are you constantly raising money?
No.
Or just like there's a cap, like you cap it at a certain point?
I capped it a long time ago.
Oh,
I
okay.
haven't taken a new client on in 3 years.
Oh, okay.
And I don't market. I'm not looking to raise any more money.
Okay.
I'm past all that. When I was 30,
Yeah.
I wanted to be a billionaire. Just like
Okay.
everybody.
Yeah.
At 56, you know what I mean? I've learned that I don't need to have money like that. You know what I mean? I have plenty of money and I make plenty of money, and it's more money than I could spend anyway. So, and the whole headache of it all, you know what I mean? Dealing with this and that and the other thing. My life is relatively simple now from that point of view.
Yeah.
And I don't want it to be anything but that. So
That's good. Yeah, it's interesting because I think all the traders, like in the trading community, whether you're day trading or swing trading, you always want to make more. And like, once you hit that point, you just keep on looking for more and more. So it's good to hear from someone with 30 years of experience that
it took a very long time to get here, I can tell you.
Yeah.
I was trying to I raised money for God knows how long, 20, 25 years, going through that. And it just gets to the point where now it's just so ironic because now I could raise a lot more money and I don't want to.
Yeah.
But, yes, everybody always wants more. And that gets into a whole psychological thing, too. At what point does that end? At what point do you just want to chase happiness rather than money? And people have said to me, oh, it's so easy for you to say that now because now you have money. Fair enough.
That's a fair point, yeah.
It's a fair point, but the
Yeah.
truth is one kind of goes with the other, too. I have money. I could have a lot more money. Okay.
True, yeah.
I can go and raise $1 billion and charge people 1 in 20, right? I mean, 1 on $1 billion is a lot of money, right? But I don't want to do that for all these other reasons that make my life happier.
Yeah.
So, everyone's got to choose their path, and your path changes with age and all that. Like my kids are all out of the house. My college educations are all paid for. My expenses are very low. So, I've done a relatively good job having been coming from not having any money 20 years ago, being totally broke, and having kids and having to put food on the table and not being able to do that for a while, helped me sort of build how I think now 20 years later, So, it's all the cycle of life type of stuff, and all these things take time to develop, and you got to go down your own path,
Do you think you ever quit trading? Have you quit before?
I did when I closed my CTA down 2013 or 14.
Oh, okay.
I took about 18 months off, which was the first 18 months I'd taken off since I was 22 years old.
Oh, and how was that?
It was good. I needed to defrag. I had a very bad experience with running this whole CTA and having all these employees and all that. And I also
Okay.
got divorced, which was ugly. So I needed to kind of defrag. I moved up to the country and, lived on a farm and just kind of defragged for a little bit, got involved in some other businesses and all that. And then I came back to it.
Do you think you're like in the future there will be a time where we retire from trading?
Damn, I hope so, but I doubt.
You hope so?
I doubt it. I truly doubt it.
Okay.
I'm getting close to the point now. I have targets in my mind for where I no longer want to be managing money.
Oh, okay.
And just go back to sort of managing my own money and make it sort of a family office type of thing and do that.
Okay.
Whether I get there or not, we'll see. But do I honestly think I'm ever going to stop? Not really. I think I'm probably going to just kick it right in front of the screen one day, and that's going to be the end. I spend a lot of hours in front of the screens.
Would you teach your kids how to trade? Well, you already have.
I tried, but my kids, they don't listen to me.
They're
They
not
don't have any
into,
interest.
Futures, they're not into stocks, they're into
No,
crypto.
my son's a gamer.
Oh, okay.
So he works for a gaming company
Okay.
now, so he's not particularly interested in it.
Okay.
My daughter is not really into it either. She's more into sustainable fashion and things that kids her age like. So that's kind of her thing. So yeah, it doesn't look like. At one point, I thought that would be the way, but it doesn't look like that's the way it's going to go. But truthfully, I feel like through our crowded market report and all that, I feel like I'm teaching 1,000 kids to trade. Not all of them are kids necessarily.
Right.
So
I mean, you see them as kids because they're learning from
some of them are older than me. You know what I mean? But I don't know if I see them as kids, but it's nice. It's nice. Again, something that I never thought of until I became older.
Yeah.
At 30, I didn't care. At 30, it was all about what can I take out of this world, And now that I'm getting older and seeing the end of the rainbow, you start to think about what can I give back to this world.
Yeah.
Nothing I ever thought of before. I don't think this makes me some kind of great humanitarian. I think that this is just the cycle that most people go through. You get older and you start thinking more about what have I left behind rather than what have I taken,
That's true.
And there's nothing I can really give. I mean, I have some money I can give to charity and I do that. But truthfully, what can you really give is time. So I don't know what else I can give. This is all I know. This is all I've ever done. So this is all I can really give, right? I always say, like, okay, I figured out this way to sort of pick off the weakest traders out there and make money. And that's great. Okay, I don't apologize. I buy at the offer, I sell at the bid. I don't force anybody to sell to me or buy from me. I'm not stealing anything. I do what I do, and that puts food on my table, and I don't apologize. But from a legacy point of view, is that really the greatest thing in the history of the world? I'd rather at least try to build a legacy where maybe somebody out there, even if I just get a small handful of people, can look back and say, hey, this guy Jason Shapiro really helped me. I think that's a much better. That's a good legacy. So that's kind of what I try to do now. But whether it works or not, I think it's working. I get a lot of good comments from our people.
Yeah.
Not everyone. Some people come and leave and whatever.
That's
but
okay.
Yeah, a lot of people. If you can just get through to some people, and help some people, you're not going to help everybody, right? But if you can help some people, then maybe that's a good thing.
Yeah, I know a lot of people probably know about you now from the book. Do you think I know I read the book, I listened to it. You were really hesitant about being published and having your story kind of put out there. Do you think now that it's been a couple years, do you think it was a good decision to do so?
Based on the book,
yeah,
people started coming to me and asking me if I could help them learn how to trade.
Okay.
And out of that came this crowded market report.
Yeah.
And I went into this crowded market report with no expectations, no anything. I didn't even put it together. One of the people that approached me, I said to him, I'd love to help you, but I can't help all these people at the same time. I have a business, I have a family, I'd love to figure something out. And he said, well, why don't I start a website? And, and I said, go for it. And he did. And so out of that has come a lot of good. And that really was mostly because of the book. If I was just some jerk, Jason Shapiro, you know what I mean? Chances are people wouldn't be joining my website, right?
I see, yeah.
Now, I am some jerk, Jason Shapiro, that happens to be in this book. So therefore, it got a lot of attention, and people came to me and have joined. And so that I feel like we've turned it into a positive. I was a little bit hesitant, again, because of the cycle of life. If I were 30 and Jack Schwager asked me to be in Market Wizards, I'd be sign me up, I'm in my 50s. I'm not looking to raise any money anymore. I don't care if people know about me. My ego, it's not about my ego. It's not about doing any of that. So I was like, I don't really know if I want to do this. But my friends just were like, dude, you're doing it. Because when we were kids, when I first started trading was when the first Market Wizards book came out. And we used to quote that book on a daily basis. I mean, I read that book 20 times in 2 months. And we used to quote it on a daily basis. So when I had the chance to get into Jack's book, and I was a little hesitant, and I was talking to my friends, and they were like, dude, shut up, you're doing it. You're doing it. So I did.
It makes sense. It's a whole cycle. Now the newer traders, they're going to read a book, learn about you, and maybe that's what gets them into trading and learning about the markets.
Hopefully.
Yeah.
Hopefully. I mean, I don't know. I think I can help people. I do it, in a little bit different way than I think most of it. I was never knew about any of this people like you out there or people like any of the people out there, I never knew about this entire world until we created this. And I don't like a lot of what I see out there personally. It's just like anything else in the world. Sizzle sells, steak doesn't. So the people that have more sizzle tend to get a lot of view, and that's great. But a lot of them I find are selling scams, you know, and that in a way pisses me off. I don't go out there saying, hey, join my thing and I'm going to show you how to turn $10,000 into $1 million in a year.
Right.
In fact, I go out there and say, do not follow my trades, okay?
Yeah.
We're here to help you learn about what I find to be the more important things about trading. Risk management, discipline, overtime, all these things, right? This is really what we're focusing on. Not, hey, look at me, I'm a great chart reader and follow my chart breakouts and you're going to make millions of dollars.
Yeah.
You know what I mean? I try very hard not to be that. The trades that I do are on my newsletter and are talked about. And if somebody chooses to copy those, they can. But what I'm really trying to do with that is show them, here's my process. Here's me following my process.
Yeah.
Here's me getting stopped out of trades in a disciplined way. Here's me riding winners in a disciplined way. And these, I want you to see, if you think I'm a market wizard, I want you to see how a market wizard does those things so it can help you do those things over time. And like I say, 99% of the people are not necessarily going to learn right away from that, but they will learn in time.
Yeah, they have to.
Because they will lose money over time doing these other things. And I say to people all the time, if what you're looking to do is turn your $10,000 into $1 million in the next year, go somewhere else. There's 1 million people on the internet that will help you do that, okay? And you will fail doing that because it's all a fail. And once you fail, if you still want to trade and you still are interested in this, then come back to us and hopefully we can help you learn those lessons. Because you're not going to learn it the first time because you're not going to believe me. Okay, you're going to believe the guy with the Ferrari that just bought, you know, ODT options and, you know, that whole thing, right?
Options.
You know, that's what you're going to make. That's what you're going to believe because that's exciting, right?
Yeah.
That's the sizzle.
Yeah.
So, you know, if that's the way you want to go, that's the way you want to go. You know, Harry Houdini is a big idol of mine, I would say. And I don't know if you know the Harry Houdini story, but he was, you know, probably the greatest magician. What's another word for magician?
Illusionist, yes.
He was one of the greatest illusionists that ever lived. And the second half of his life, he went around the world and exposed people that were doing frauds because he knew how to see their frauds because he was an illusionist himself, right? He never claimed what he was doing was real. He claimed that he was an illusionist. He would say, I'm going to fool you.
Yeah.
Okay, but what I'm doing is not real, but I'm going to fool you. Okay. And then other people, he went around the world the whole second half of his life and exposed frauds. And I feel like that's what I like to kind of do with the last part of my life, is get people to stop buying into the bullcrap that's being sold to you about how markets work, because it's bullcrap. And I'm not just talking about, you know, these scammers that are on the internet selling the latest, you know, great day trading indicator. I'm talking about right from the top, man. Everything, to me, what Wall Street is talking about. Certainly what you see on CNBC and what you see in the media. They are teaching what I consider to be very, very bad lessons. Now, they're never going to say it. Look, Jim Cramer's not going to get on TV and say, hey, the market is pretty much efficient, so anything I'm going to show you here is not going to add any value. Because then he wouldn't have a show.
Yeah.
You know what I mean? But that's the truth. You know what I mean? The market is very efficient. And getting into this whole fundamental analysis thing is not really going to add very much value.
I see.
And so I kind of want people to start to understand that. You know, if I can help people to understand that, then maybe I'm doing something to help people.
What are a couple of actionable tips you would have for, let's say, a new trader showing up today saying, hey, I have $5,000, but I really want to learn to trade the right way? What are the 5 actionable tips you'll give to them?
Don't fight the tape.
Okay.
Don't fight the market. Okay, it'll kill you. You don't know more than the market. The market is made up of the entire world meeting together at a price. That's what the price is. It's the whole world's opinion meeting at one price. Don't fight that. You're not smarter than the whole world. You know, somebody out there might be the single smartest person out there, but that's not even going to get you anywhere because you have to be smarter than all of these people combined if you're going to try that. And you're not. Nobody's that smart, right? Except, of course, our host here. But other than our host here,
I'm not that smart.
Nobody is that smart. It's impossible. So stop fighting the tape. That's not going to work for you, right? Focus on risk management. That's this. I can't say it enough. And you're going to be, oh, this old codger's boring. That's all he talks about. But I'm telling you, man, that's the key to this game. Focus on finding risk reward. That's the key to this game. You're not going to predict the future. You're not going to have 90% of your trades make money. Okay. You have to be able to make money on less than 50% of your trades making money, which means that you have to make $4 for every time you lose one. You have to focus on a process that's going to make you 4 or something, 3, 4, every time you lose one. You got to focus on that process. And once you get a process like that, you have to be very disciplined to that process, which is very hard to do because your process is not going to work all the time.
Yeah.
But realize what it is your process is trying to capture, and make sure it's working during those times, and make sure it's not doing poorly when it's not those times. Those are really the keys to this game. Be super contrarian, yes, but don't be super contrarian price, right? Be super contrarian participation. And that doesn't mean you have to use the same data I use. It's actually pretty simple. Find the losing traders that you know, because you know them, right? And wait until they're all doing the same thing and fade them. You know, what we say is don't trade, fade. I have a shirt.
Fade.
I didn't wear it today. Yeah.
Okay.
In other words, don't think that you're going to be a great trader. It's so much easier. Just find all the losing traders and go opposite them and make money. If 95% of traders lose money, which is maybe a conservative number, right? Well, then why not capture the money that those 95% of it? Like, to me, that's the easiest way to do it, right? Figure out what they're doing. And it's still the same thing. If you know all these people are losing traders and you've seen them lose money time and time again, and you want to go opposite them, that's fine. You still have to wait for the market to confirm it, right?
Yeah.
If they're all looking to be short S&Ps here, and the S&P is going straight down, don't fade it yet. Fade it when the market starts to confirm that idea. However you want to define confirm. It goes above its 20-day moving average. It goes above its 200-day moving average. However you want to define confirm, right? But fade, right? Don't be in the consensus. I know that there are times when the consensus makes money. But over time, they by definition cannot, right? Even if you look at long-only fund managers, they underperform. They don't lose money when the stock market goes up. They make money when the stock market goes up because they're long-only.
Yeah.
But they underperform the stock market. So if you've been long the S&P and short all of their stuff, you would be making essentially risk-free capital, right? So focus on being contrarian, but focus on what that means too, right? So those are really kind of the things I think are important.
Yeah. Oh, those are really good points. And also, trading futures versus trading stocks. What do you think are like the pros and cons, and what traders should look
I don't really
at
think
first?
anything's different. I really think trading, I've traded all these assets. I think they're all the same. All these lessons apply to everything, right? Trading futures can be a little cheaper, which is always good.
Oh, yeah, the micro futures, yeah.
Yeah, I mean, they can be cheaper in terms of commissions. They can be cheaper in terms of, I know that people don't worry about that anymore because theoretically we live in a no commission world, but
Right.
you are getting commissions,
Yeah,
whether you believe it or not, you know what I mean? But be a little bit, they can be a little bit more liquid, some of them, but it doesn't really matter what you trade, It's all about these other lessons. They apply to no matter what you trade or how you trade. These are the things that apply.
Like, I know in the U.S., trading futures is like taxed differently than trading stocks, right? Is it more?
I'm not a tax expert.
Oh, okay. So, maybe I might be wrong.
You can declare yourself as a trader somehow, and then therefore you get some kind of beneficial thing or something like that. But I'm not a tax expert. I manage money for my clients. The money I make ends up being revenue to my firm, and my accountant takes it from there.
Okay.
And then I just start writing checks to these people so that they can buy bombs. Okay. Unfortunately, that's how my tax things work. I don't know. You live in Canada, so but
yeah, it's a little bit different.
In the U.S.,
Yeah. Have you what else do you do outside of trading? Anything else you enjoy other than looking at the markets every day?
I like to play guitar.
Okay.
Which is something I picked up just a few years ago. I've always played music, but I got into guitar a few years ago, and so I spend a lot of my downtime doing that, which is wonderful because it's a form of meditation.
Yeah.
It's a form of getting away from the markets. If I'm concentrating on getting a song down or whatever, I'm not thinking about what the S&Ps are doing right now. Maybe I am, but at least I'm not paying attention.
Yeah.
And I kind of like it as well because I feel like with trading it is extremely competitive, obviously.
Yeah.
No matter how much
For
of a
sure.
laissez-faire attitude I want to have, if I'm honest, I'm just as competitive as the next person, and I want to be the best at this that the world has ever seen. I don't think that I am, but that's the goal. I don't know if you ever get to that goal, but that's constantly the goal. Whereas with guitar, my chances of being, the next Eddie Van Halen or Jimi Hendrix or whatever is pretty past me. So I don't take it as a competitive thing.
You actually enjoy it.
I just enjoy it.
Yeah.
You know what I mean? If I get a little better today or I don't get a little better today, it's not that big a deal. I'm just playing songs and I'm doing it for enjoyment, and that takes a lot of stress away as well. It's my wife does a lot of painting.
Okay.
And we were just sitting with my brother and his wife, and she did a painting for them, and they're like, "Oh, it's so fantastic. Would you ever consider, doing this as your full-time job?" She's like, "I think that would ruin it for me."
Yeah.
So I think that's a good point.
Well, kind of off topic, but before I started trading, I was working in film and animation. So I used to love like art and design, painting, and all that stuff. And
So you had to do it for a living.
Yeah, became that what I do for a living. I'm like, I hated that crap.
Yeah. It's hard.
So since I quit, I think I haven't picked up a pen to draw in like years.
Wow. Well, because look at you now.
Well,
Who knew?
It's different. Yeah.
I bet when you were in art school, you weren't thinking you were going to be a market person, right?
No, I did not. Well, I looked at stocks because in art school, like everyone's broke.
Yeah.
You want to make some money, but so it's different then.
Good. You never know where life's going to go.
Yeah, exactly. Thank you so much for sharing so much tips and wisdom with our audience today. Where can people find you?
So we have a webpage for people that are super interested, crowdedmarketreport.com, that people can sign up. We have a newsletter. We have Discord. We have all kinds of things that we do, weekly get-togethers and all that. There's also charts-only membership there if you just want to see the COT charts. I can tell you, unbiasedly, we do have the best COT charts out there, although you can get free COT charts, but I think ours are really good. I'm also on YouTube every week. We try to do a video on YouTube, which is also Crowded Market Report. We do interviews sometimes with people, traders, or other people that have to do with this, and otherwise I don't do a lot of specific market talk. Once in a while I do, but I'm really focusing on the boring things, risk management and all these things. And then I'm on Twitter too, where I sometimes post various things, which is crowded. I think it's crowded _MKT_RPT.
Okay.
So I'm on Twitter there too, which is really more for entertainment than anything else. But
Okay. We'll put all your handles up on screen. And of course, people can read more about your story from the book Unknown Market Wizards as well.
they can.
Yeah. Thank you so much, Jason.
Thank you for having me.
Jason Shapiro is a living testament to the importance of risk management and entry timing to achieve long-term success in trading. I mean, he's traded for the last 30 years, so the guy has a lot of experience and has been through a lot of failures, so we can definitely all learn from him. Comment down below what you learned from Jason today and share your thoughts with us. And if you haven't done so already, please remember to like the video down below. And I look forward to bringing you even more inspiring trading podcasts. You can check out more episodes with pro traders over here.